Hey guys, Joe here, back with another video. Today is Monday, June 7th, and Blackberry stock is trending, and I wanted to dive deeper and find some unusual options activity within Barchart and find some actionable option plays we can make today. On the homepage, you want to navigate to the Unusual Options Activity tab. So first, let's define what unusual options activity is. Unusual options activity identifies option contracts that are trading at a higher volume relative to the contract's open interest. Unusual options can provide insight on what smart money is doing with large volume orders, signaling new positions and potentially a big move in the underlying asset. So what this means is when the level of activity within an option picks up, that's a sign that an investor or an institution is loading up and probably knows something the public does not. These are some of the criteria you should look out for when finding actionable option plays. Volume, open interest. Is it out of the money? Is it short dated? And is it a large sweep or block order? First thing you want to do is navigate to the most active options tab. Make sure you're sorted by volume, so the topmost trending volume is ranked at the top and it descends downward. So as you can see right away, AMC is number 1, Apple would be number 2, and Blackberry would be number 3 with over 600,000 contracts traded today. So if we look at some of the key metrics here, IV rank, this is the implied volatility relative to the highest and lowest values over the past year. The closer the IV rank is to 100%, that means the more volatile it is. So Blackberry at 42% is close to the midpoint, not necessarily close to 100, but it's getting there. Next to that, we see the options volume, over 600,000 traded, and that's the total volume of all option contracts that were closed today. Next to that is the percentage of put and call ratio. So Blackberry is pretty bullish here, only 20% put ratio versus almost 80% calls. So people are leaning bullish on this trade. And you can actually break it down into a ratio, and this is what the put call volume ratio is. The decimal point here would be 0.26. Next, you want to navigate to unusual options volume, sort by volume. And again, number 3, Blackberry with over 600,000 traded, open interest of 1.2 million, which is huge. And this is confirming our suspicion that Blackberry is actively being traded today. And finally, you want to navigate to the Unusual Options Activity tab, sort by volume. And this would give us an exact breakdown of what specific option contracts were traded today. So things like price, strike price, expiration date, the bid and ask price, and the last price placed. So coming in at number 8, Blackberry. Blackberry calls here at a $20 strike price, expiration June 11, which is in 4 days till expiration. And these are being placed at a very tight spread of 99 cents to $1, with a volume of 50,000 and open interest of 17,000, and implied volatility of 350%, which is huge. And if you don't know what implied volatility is, it's the estimated volatility of the option strike over the period of the option, and a delta of 32. And if we keep scrolling down here, we see another Blackberry call. This one is at a strike of 15, so this one is already in the money. So $15 strike price, expiration June 11, 4 days till expiration, and the same type of spread, very tight spread. So the bid and ask of 2.13 and 2.15. This is very tight. 39,000 volume, 14,000 open interest, and IV here of 271%. Let's go ahead and find one more, and $16 strike price, Blackberry, expiration 4 days. People paid between $1.80 to $1.81 per contract. 34,000 volume, open interest of 6,000. 290% implied volatility, and delta of 54. And here's another one, call $40 strike price, expiration in 4 days, bid and ask of 19 cents to 20 cents, 26,000 volume, almost 3,000 open interest. So personally, I'm somebody who likes to place option calls that are out of the money. So I'd like to pick anything that's trending within the first 10 search results. So this Blackberry here coming at ranked number 8, I would actually go ahead and pick this one as our option play of the week. And that would be a $20 strike price. And that would be a call option at $20 strike price for expiration on June 11th. And I would pay 99 cents to $1. And actually this 4 days till expiration is perfect because this is a weekly option, and usually weeklies traders are only in this trade for a day. That's what I would recommend. If you're looking to do an option play on Blackberry, go ahead and buy it and sell it within the same day. You don't want to be left holding the bag. Usually with such heavy, unusual option activity on a name like this, with 50,000 volumes, this is a bullish call and you want to be in and out fast. So you don't want theta decay to eat away at the option contract value. This would be a good idea to get into today, Monday, June 7th, and sell by Tuesday, June 8th. So just to recap, this specific option contract meets all of our criteria. The volume is greater than the open interest. It is out of the money. It's short dated, and we see a large number of block orders coming in. And if we look at the Blackberry chart on the 1 hour time frame, we do see that Blackberry broke out early in the morning. And as you can see, the MACD line is above the signal line. This blue line is above the red signal line, and that's a bullish indicator. So go ahead and stay in this trade for about a day and sell quickly. So I hope you enjoyed this video. If you have any questions, please leave a question in the comment section. I'll be happy to respond. Don't forget to like and subscribe. I'll see you on the next one.